When we talk about accuracy, accuracy is not even necessary in terms of high-end accuracy to make money. You don't even need high accuracy to build wealth, but you do need time. Time is the missing element, and that's the secret. That's the holy grail to allow compound interest to do its magic.
Let's be honest here for a second. The real reason why you fail prop firm challenges is simply because your strategy lacks data. And at the end of this video, you will learn how to develop a strategy backed by data. If you go to a doctor's office with a complaint about your health, a good doctor will look into your medical history, which is gathering data, right? To be able to understand what type of prescription best suits you as a patient. Or as an architect, you have a client that wants to develop a plot of land. You would agree with me that you need to gather enough data to be able to design a structure that best suits that plot of land, right? Think about any profession or job that doesn't require data gathering before execution. I bet there is none. Athletes studies data of their opponents before a match. Auto mechanics tries to gather enough data about the problem of a car before proceeding to fixing it. Now, as an aspiring Forex trader, ask yourself, why do you think you don't need a data-backed strategy before trying to execute like a robot or a professional in the market? You need data to be able to gauge whether a strategy is profitable in the first place. This month of January 2024 alone, I am up 4% as at the time of recording this video. I would have made it 6% if I didn't hesitate taking this trade. The setup was perfect, but I hesitated. But whatever, shit happens. My strategy is backed by data. That way, I am not scared of executing trades every time the setup play out. In my case, I already know that if I place 10 trades and I maybe win 5 and lose 5, I am still up 5%. That makes me confident in my strategy. I believe most or maybe everyone watching this video is actively trading, whether it's on a personal account, prop firm account, or even a demo account. It doesn't really matter. The point is, you are actively trading on a particular execution model. You may be struggling or constantly blowing these accounts. If that is the case with you, I'd like to ask, have you backtested your strategy? Now you may ask, what is backtesting? Backtesting is the act of using historical price data to gauge if a strategy is profitable or not. During backtesting, you want to know the win rate of your strategy to be able to know or decide on what risk to reward to use. Let's break it down, shall we? Now, we have strategy, win rate, then risk to reward. If you have a 40% win rate or more after backtesting, then you want to have at least a 1 to 2 risk to reward ratio. That way, after 10 trades and maybe you lose 6 and win 4, you are still up 2%. And after 100 trades, you win 40 and maybe lose 60. You are 20% up. Remember, these are worst case scenarios because with a good strategy, you will eventually have a higher win rate. And also, imagine you have a 100k account and you are 20% up. That's $20,000 right there, right? If after backtesting, your strategy is giving you a 30% win rate, that means your risk to reward has to be higher to make a profit. Now, this is where many beginner traders go on tilt. They hate the fact that they have a 30% win rate, which of course means a 70% loss rate, right? But professional traders will be like, okay, this is the reality of my data at the moment. So while working on improving my win rate over time, I will focus on increasing my risk to reward to at least 1:3 in the meantime. This way, I am okay with the fact that after 100 trades, I will lose 70, which is minus 70%. However, with a 1 to 3 risk to reward of 30 successful trades, I will be up 90%. That way, I'm still profitable over time. So guys, you know what to do. Just play with the numbers to figure out what works for you based on your strategy and win rate. The consistently profitable prop firm traders like myself, this is exactly what we do. We are basically just stacking the odds in our favor. You need a paid version of TradingView to be able to backtest properly on the platform. Use the TradingView link in the description below if you need a discount on your purchase. A 1-month subscription should be enough to backtest 1 year of historic data. Just consider the cost of purchasing a paid version as an investment to your trading success. After paying for the paid version, to backtest properly, all you need to do is to use this replay tool. I believe if you go to TradingView, we can all find this replay tool there. So you want to click on that replay tool. It's more like a bar replay tool, right? So what it basically does is you can cut out, you can go back in time into historic data right, and use that replay tool. So let's assume I want to cut off the previous zone. I can't do that now because I'm not on the paid version, because I really don't need it. I only use it to do my analysis and stuffs like that. But that is how to basically use it. So once you click on the replay tool, you want to go back in time and place it anywhere you want to start your backtesting from and start backtesting from there. So after you use the replay tool and cut out the chart, then you have your play button here. You can increase the speed of your replay if the default setting is too slow for you. I hope that makes sense.
Sure, yeah, that makes sense.
But if you need any question regarding that, and if you want me to make a separate video on how to backtest, let me know in the comment section below. After all the backtesting and refining your strategy, I always recommend you implement it in a simulated live market environment before putting your hard-earned money on the line in a live market, whether prop firms or personal account. So I am going to show you how to implement this in a simulated prop firm environment with all the prop firm rules in place. It is completely useless if you keep buying prop firm accounts and blowing it without actually proving if you can actually pass a challenge account, right? And thankfully, many prop firms out there like FTMO offers free trial, right? So before you start spending that your money purchasing a prop firm account, go for the free trial. Try to see if you can pass the free trial before you start putting your money on the line. And to do that, let me just quickly show you. Just come to Google and type FTMO free trial, right? How about a free trial? The purpose of the free trial is to serve our new clients to see how it works and assess their trading skills to see if they have what it takes to pass an FTMO account. So very simple and straightforward. You have the same rules like you are trading an actual challenge account that you actually paid for when you actually go for this free trial account. You can see the free trial here. Just click it and fill in the necessary details and try to trade it. All right, the whole idea is just try to trade it, see if you can actually pass it before going ahead to start paying for these accounts. All right, that makes sense, right? Make a decision today to be intentional about your trading success. Approach this with all humility and professionalism required to be among the top 5% of profitable traders out there. It is in your best interest to disabuse or cut ties with the so-called Forex gurus that peddle the unrealistic fallacy of 90 to 100% win rate or your strategy is BS. Until you realize that the Forex market is you versus you and no external bullshit matters, you will be stuck in the circle of blown accounts, bleeding money, depression, and constant pains and regrets. It's 2024. Wake up, my G. That's it, guys. So if you made it to the end of this video and you are yet to give us a like and also subscribe to the channel, please do so now, and also share this video to beginner and struggling traders out there that may need this information. Thank you as you do so.